For most of the past year or so, the US dollar has been going through a rough time. Having surged in the run-up to Trump's second term, in large part because markets thought tariffs would hurt the US less than everyone else, the dollar then crashed pretty hard in his first few months, once markets realized his tariff policy was going to be more, well, let's say unorthodox than expected. However, after some languishing, in the past couple of weeks, the dollar has staged a remarkable recovery, and is now the strongest it's been in at least a year. So in this video, we thought we'd do our best to try and figure out why this is happening, and explain why it's not necessarily a good sign. This map shows all of the places that Trump has launched military offensives since returning to the White House last year. But how did we reach this point? In the latest issue of our magazine, we run through a timeline of Trump's military chaos across the world. That's just some of the 80 pages in the magazine, because there's more to too long than you'd expect. Purchase your copy by clicking the link in the description. Now, the best way to measure the strength or weakness of the US dollar is to look at the so-called dollar index, which basically compares the strength of the dollar against a weighted basket of other major currencies. The dollar index is generally considered a better way of gauging the dollar's strength than just comparing it to a single other currency, because one-to-one comparisons tell you as much about what's happening to the other currency as they do the dollar. If the dollar weakens against the euro, for instance, it could just be that the euro's having a good day, rather than the dollar actually struggling. Conversely, if the dollar falls against a whole load of other currencies, that's pretty solid proof that it's actually getting weaker. Anyway, according to this index, the dollar has basically been trending upwards since late January, and is now the strongest it's been since April 2025, when the dollar was in free fall after the madness of Liberation Day. So, what's going on here? Well, there are at least 4 factors. The first and simplest is that the US economy looks in better health than it did a few months ago. This is in part because the war in Iran looks like it's ending, and because of persistent AI-related optimism in the markets. But it's also because, more concretely, the official data has looked surprisingly alright recently. While headline inflation came in pretty hot last month, core inflation, which strips out energy costs and is the Federal Reserve's preferred measure of inflation, actually came in slightly below forecast. Similarly, job creation has come in surprisingly strong in the past 3 months, and US corporates have been posting record profits. This becomes very apparent when you look at the so-called surprise index, which basically tracks the difference between official economic data and forecasts. When it's positive, it means that the US economy is outperforming forecasts. When it's negative, the US economy is underperforming. And, well, thanks to a string of surprisingly good numbers, the index just touched a 3-year high. The second reason on our list is that, well, weird things are happening with Asian currencies at the moment. Both the South Korean won and Taiwanese dollar have been on the decline for months now, despite the fact that both currencies are enjoying AI-related export booms, which you'd expect to lead to an appreciation in their currencies. No one's 100% sure on what's going on here, but it probably has something to do with the fact that big AI companies are just making such massive profits that they don't know what to do with them, and are thus just recycling foreign currency earnings into US financial assets to guarantee themselves a return while they figure out what to do with the money. At the same time, the Japanese yen is also having a tough time, falling below 160 to the dollar early this week and teetering on a near 40-year low. Again, no one's 100% sure why this is, but quite a lot of it is presumably down to the fact that interest rates in Japan are still pretty low by international standards, making it less attractive to save in yen, plus long-standing anxieties about structural problems facing the Japanese economy, like an aging population and high debt levels. Anyway, the point we're trying to make is that a number of Asian currencies are slipping at the moment, and because the dollar's strength is inversely related to that of these other currencies, this has pushed the dollar up. The third reason on our list is Kevin Warsh. As you might already know, Warsh is Trump's chosen successor to Jerome Powell, who was the previous chairman of the Federal Reserve. Powell did an impressive job standing up to Trump when he was trying to pressure the Fed into cutting interest rates, despite the fact that inflation had stayed above the Fed's 2% target for the entirety of Trump's term. There was some anxiety that whomever Trump picked as Powell's successor would end up basically bowing to Trump's pressure, cutting rates and thus stoking inflation. The prospect of elevated inflation, which would reduce the dollar's real value, and a politicized central bank spooked the markets and was one of the big drivers behind the sell-off we saw last year. Walsh, however, was one of the less crazy names on Trump's shortlist and has already signaled that he won't cut rates just because Trump tells him to. In his first meeting as chair earlier this month, Walsh struck a conspicuously hawkish note, insisting that his first priority would be bringing down inflation. This has reassured the markets, and judging by the dollar's recent appreciation, convinced investors to return to the dollar, as has the prospect of further rate hikes, which would make it more attractive to save in dollars. This might also explain why gold has been selling off recently. It's at least possible that risk-averse investors moved out of dollars and into gold when they thought that the Fed's independence was going to be compromised, and are now moving back into dollars now they know that the Walsh is making all the right noises. This takes us nicely onto our fourth and final reason. It's at least possible that some of the dollar's recent strength is a consequence of a dash for cash. In other words, it's possible that investors are moving into the dollar because they're worried about the possibility of a crash, like, say, the bursting of an AI bubble, and the dollar has traditionally been seen as basically the safest asset. This might feel in tension with our first reason on the list, about the apparent strength of the US economy, but two things can be true at the same time. Some investors might be buying dollars to invest in the US, and others might be buying dollars to stockpile them in anticipation of a crash. This is actually what happened during the 2008 financial crisis. Just as the Lehman Brothers collapsed, the dollar surged, not because everyone was bullish about the US economy, but because the market, almost reflexively, returned to the dollar in the face of a crisis. Whether we're on the cusp of yet another era of American economic dominance, or the 2008-style crash, well, only time will tell. The latest issue of our magazine is out now, and if you want our best value ever, subscribing and using code SUMMER26 gets you your first copy for as cheap as £4.99, as well as 20% off as long as you stay subscribed. I told you about one of the articles at the start of this video, but this issue is truly jam-packed with content from all around the world. Obviously, the headline section is our rundown of Trump's wars around the world, discussing all of the different countries and regions that have faced Trump's military wrath, going nation by nation through our timeline, and reaching the ultimate question, has Trump created the modern holy war? From there, we dive into our regional sections, starting with the UK, where we unpack the results of the recent elections, take a look at the UK's odd foreign posture, and discuss if Britain has become ungovernable. Then in our EU section, we discuss how Russia's sphere of influence is fading, why Europe's energy transition isn't what you'd expect, as well as looking at the Euro's missing members. Finally, in the global section, we discuss whether we're seeing echoes of the First World War, what's next for Iran, as well as what really came from the Gen Z protests we saw emerging last year. That's not even everything. With this 80-page issue, our joint longest ever, there's even more to read than I've been able to mention here. So click the link in the description to learn more and grab your copy today.